Hello again and welcome to the final lesson. In this section, we will introduce you to Exchange Traded Fund, or simply known as ETF. Let's get started. ETFs and mutual funds are pool of monies used to invest in some assets. This pool of money can be used to buy any assets. To invest in these funds, you will have to buy the shares of the funds. One of the key differences between ETFs and mutual funds is ETFs are traded on a stock exchange, whereas mutual funds are managed by some companies. Let's move on to compare more differences between mutual funds and ETFs. One of the main strengths of ETFs are their liquidity. Since ETFs are traded on the stock exchange, you can sell your shares easily. On the other hand, mutual fund is a pool of money managed by the company, so it can take a few days to process your withdrawal. Liquidity can be a problem if a lot of people withdraws the money from the mutual fund. Management fee for ETFs are also typically lower than mutual funds. Another difference is ETFs does not have minimum amount of investment required, whereas mutual funds typically require a minimum investment amount. Finally, there's no sale load fee for ETFs, but you may have to pay fees for withdrawing your money from a mutual fund. Looking at all these different aspects, it is clear that ETFs are the superior choice over mutual funds. It is always better to invest in ETFs than mutual funds. Every ETF has a net asset value or NAV associated with it. The net asset value is the real value of a share in the ETF. It is calculated using the weighted average of all the asset prices in the ETF. The NAV is updated every day after market closes, and it is published on the ETF official webpage. The share price of the ETF is the price that the markets feel that the ETF is worth. You should always buy ETF that has a share price close to the NAV. There are ETFs out there that has the share price way above the NAV. Eventually, the share prices will have to revert close to the NAV. GBTC, an ETF for Bitcoin, is such an ETF. This picture here is taken from the official website of GBTC. Obviously, the share price on the left is way above the NAV on the right. I cannot think of any good reason to buy GBTC because you have to pay a huge 41% premium for Bitcoin. The share price can be easily the share price can easily revert back to the NAV price one day. This will cause its investor huge losses. Our advice is to avoid ETF that has their share price way above the NAV. So you would want to avoid GBTC in this case. Let's switch gears to talk about analyzing ETFs. Unlike company stocks, ETF has no fundamental data. Okay, and technical analysis can be used as an alternative to predict the price behavior of ETFs. As we have shown in lesson 2, you can use crystal ball to help you simplify the process of analyzing stocks. In this case, you can even use it for ETFs. We will end our video here. Be sure to go through the text. In the next section, we will go through diversified portfolio ETFs so that you can simplify your investment decisions. We will also introduce few other popular ETFs.